be prepared for changes in the market because it's no longer like 2024. We need to adapt to fluctuation. Institution has way bigger money, so we just like the little fish want to follow the trend. Unfortunately, we are. What can the rich people, what can we track about the rich institution that they cannot lie about is where their money is going. If they really put it in cash, means either they cannot find a good investment, or maybe they think there's a crash, or so they're afraid that AI might stagnate because of hardware limitation, software limitation, and all that. But here's my take on it. Okay, today's topic is going to be Nvidia's earning. And the next thing is you guys will learn about SPX. This is what our said and done strategy is based on. It's a lot more consistent, but we'll show you guys where we think the market is going, right? It's been dropping. Did we get hurt? What's our strategy? Okay, and also lastly, just to help you guys, even if you guys are using different strategy, right, selling options and all that stuff, how do you enter position and do risk management? Day trading, risk management, very important. Even for our strategy, risk management, extra important because our clients are dealing with multiple six-figure, seven-figure money. So it's not just about go to the moon. It's about how do you protect the capital, continue to grow it, right? We're targeting 15 to 20% per year. Okay, so it's more important to grow it consistently than having an up and down and then go against all human nature. Okay, so that being said, let's get right into it. Just so you guys know, this is live, no rehearsal. Okay, this is Lewis. Lewis is our back-end analyst. And, you know, recently he's focusing straight on our stabilizing our strategy, hedge fund strategy. On about 2 weeks ago, he made the prediction. Again, everything is interpretation for entertainment, educational purpose. He said CPI at that time are higher than expected. So ES drop in pre-market, right? ES is the future options of S&P 500, right? He said the next demand zone, right? Demand zone just a really strong support is a 5960 and can be on a choppy sideways path. And this year driven primarily by news. Okay. So, you know, he draw the chart here, right? So at that time he drew it, he was around here. At that time was 6026. He thinks it's gonna go down a bit, come up and then drop back down, right? Today we're around the 24, right? To around this level, 5940, right? So that was his prediction, right? Let's see how right was he or how wrong was he, right? So this is the S&P 500 ES. Let's go to a 1 year chart, right? Zoom in a little bit. February 12. This is where he made that prediction about 6024, right? Actually go up and then come down. So we thought it will go down, go up and come down. So he actually went up and come down, but it's right bang on, right? Right now it's at 5965, so went down drastically, right? Similar to the chart he drew, drastically around here, this level. So it's very accurate. We already prepared for it. All right. Capital deployment reflects the fact how we're going to trade. So far I give Lewis 100 marks, 100 points, even though Lewis is not on this call. Kudos to Lewis again. He's usually 80% right, but now I think because of this one, we're 81% right. Okay, so enough patting on our back and our analyst back. What's going to happen in the next 2 weeks then? Right, so I'm showing you guys behind the curtain of today's our daily newsletter. Okay, so again, everything we're just touching a crystal ball. Mine might not be as good as yours, so take it with a grain of salt. It's all entertainment purpose. Okay, just so that we're a bit accurate on that. Okay, so based on this chart, he's thinking that we're hitting this point where there's a strong support level, and we actually think going into March for the next 2 weeks, we can come back up to the all-time high level. It's not going to go straight up, but we're already seeing a bit of rebound because of the Nvidia earning, but we're going to go like this and then climb back up again. Okay, and why? Why do we think that way? Right? Because today at 420, Nvidia has an earning release, which we'll go into. Right, this is one of the most anticipated events of the week, and I think the ES has hit the support zone as fear is in the market, right? It's due to the bounce since the last time it was this low was late January, right? So it has come back to the point as a strong support level, And then everyone's looking at Nvidia as in, this is the hottest stock of the year. So if they're doing well, we have some hope. Besides all the tariff is, all the Donald Trump is trying to, negotiating tactics or whatever, putting on tariff on Mexico and where I'm from, Canada, right? So everyone's looking at Nvidia, right? But if Nvidia failed to impress, pullback will happen. So if Nvidia failed to impress, you think it will drop lower to 5900 or 5860, which is the next support. Whereas right now we're 5965. Okay, but just a little bit sneak peek in case you don't want to stay for the whole time. You will be missing a lot. Nvidia did come off a good earning, and I'm going into detail. Okay, so Nvidia did do well, so that concern was clear. So it's kind of like Nvidia is doing well, tariff is a concern, but hey, kind of balance out. AI is still leading the way. Okay, I forgot to introduce myself. In case people don't know me, my name is Cody Ye. I was born in Taiwan, came to Canada at the age of 18. I chose engineer because I thought it was the most stable job. I don't want to be a burden to my family. And I started investing in stocks in 2011, boring stocks like TD Banks and all that stuff. And in 2015, as I went down a rabbit hole of becoming a day trader, trying to prove myself. And thank God I have a coach. I did it for 2 years. In the beginning, I was losing money, all the way 8 months into it, losing money. Eventually, I started making money, but I found that was really hard to scale, not the lifestyle I look for. And that's where I started getting into options. And, I started by selling options on individual stocks. And I found out, oh, there's not a lot of stability. There's not a lot of consistency. It's hard to pick stocks. Then I go into and, stabilized what we call our flagship strategy of said and done strategy, where we only sell options on S&P 500, and not try to brag, but just to show the track records. I brought my account with the said and done strategy from $500,000 in 2019 all the way to right now 1.6 mil, actually last year, right? I pull the money away to do different things, but that's just my track record. So if you guys really want something consistent, like that's about, I think, 20 somewhat percent per year, nothing crazy, right? And there's ups and downs along the way, but it cannot work out that way. If you guys want something more consistent, you guys don't want to sweat, go to sleep, forced to watch a lot of news, then you guys are here for the right thing. Now, on this, we're going to go into the Nvidia side of things. Okay, it's going to be a lot of fun. Okay, so before the earning, what investor and analysts are expecting or were expecting a 72% increase in revenue in the quarter ended in January. Sales expected to double to 130 billion in the fiscal year of 2024. That was the prediction. Okay, and also another key things that people are looking at is what are Nvidia's investor worry about? What are they worry about? Right? The most important customer, hyperscale. Hyperscale cloud companies is one of the biggest customer for Nvidia, right? And there is rumor that hyperscale cloud companies might be tightening their budget after years of large capital expenditure. So that was the concern. Right? Also, the last concern is that Blackwell rollout, right? CEO Jensen come out and say Blackwell. Everyone's like, what the hell is a Blackwell? Right? Rolling out, what is it? Is it going to work? Is it not going to work? Right? The newest AI chip is happening slower than expected. Are we still, is it barred from shipping to certain countries like China? Is it working, Jensen? You've been selling us the dream since 2006, right? Are you going to have a flop like Tesla, maybe go bankrupt 3 times? I'm just joking here. I don't think they're in that stage anymore. But yeah, that's the concern. Revenue grow, hyperscale, big customer. Is it going to reduce their budget? Also, Blackwell, their new chip. Okay. Now, we'll go into after earning. Nvidia sales grew 78% on AI demand, strong guidelines, and then really the key points here. Revenue was estimated to be 39.33 billion and versus 38.05 billion estimated. So the real revenue was about 5% beat on the estimation. And that's actually quite impressive because they set the bar really high, right? If we go really scroll up, company's revenue in the quarter rose 78%. full fiscal year for Nvidia rose 114%. So compared to 2023, 2024, the revenue rose 114% to 130 billion. So that's what people were concerning about. Remember the concern here? They actually raised 78% to over 130 billion. So that was B. Okay. Now you're like, Cody, what about these hyperscale? Are they tightening the budget and all that? Right? Before we go there, next part is the earning per share. A company like AI company could be spending a lot of money in their revenue. They can be making a lot more money on paper. But then if they spend a lot in expenses, you have no net income. But the earning per share will actually show their net income grow. And their net income, estimated to be 0.84, but actually adjusted to be 0.89. So actually also beat, earning also beat the expectation by about 5%. So revenue is about 3%. This is about 5%. It's a good result. Okay. And also, now we're talking about the demand for hyperscale or the Blackwell, right? So now we look at this. Demand for Blackwell is amazing. CEO Jensen Huang said in the statement, "We successfully ramp up the massive scale production of Blackwell AI supercomputer, achieving billions of dollars in sales in its first quarter." So it's not like Elon Musk back in the days is that we are making Tesla. This is our goal. No, here what CEO Jensen Huang is doing is we not only say we're going to produce more, we already sold more and we're already making it. We're already making money and we're selling a lot of it. Okay, so it's actually really good news. So that wipe away, the third concern of this one, right? The newest AI chip. So first one, wipe away the concern. Third one, wipe away the concern as well. Okay, those are two good news already. Now, the third one, Cody, you're like, okay, cool. Last year we've been doing well. So far, what he promised been delivering. What about this coming year? Okay, so the forward guidelines, for people who doesn't know, forward guidelines kind of like the CEO of Nvidia or their finance group and come out and make the prediction, an honest prediction on what they see inside the company, right? So the forward guidelines of 43 billion for Q1. So last year they made 130, billion, right? So divide that by 4, yeah, maybe about 43. So they are projecting another 9.4% sequential growth, indicates robust demand, continue the demand. Right? Last year they grew 114%. Starting first quarter, they're already looking at a substantial growth. Okay, so really all aspect, it's all good news, right? So you guys can see in the Nvidia stock, someone was asking a question for me in the Facebook group, is like, Cody, I have Nvidia was at 148. I think he asked about here, November. Cody, should I buy it? And I was talking about it's going to be more range bound between like 150 to about 120. I draw a box at that point. So it kind of turns out to be true. Drop a bit lower, come back up around range bound. But now that with this news come out, Nvidia's investor, they wipe away all their concern. AI is still strong, growth is still strong, and whatever tariff is doing, AI is still strong, kind of thing. So that's why after the earning, the stock kind of went up. Today was a very well ride, 133 to 128, $5 swing, but it kind of went up after market. Okay, so that is kind of the conclusion for Nvidia. Okay, again, do not use this as your sole decision. As Cody said, Nvidia is very bullish. Okay, I don't want to say who is in this group, right? Whoever played with Nvidia in the past, if I zoom out for you guys, okay, just looking at 5 years, Nvidia has gone through, this is just 2021, 4 years ago, from $33 down to $11. This is 70% drop. Okay, 70% drop. Here, 94 to 76, 75, 20% drop. 133 to 90, 40% drop. 70%, 20%, 40% drop. So if you guys are going to invest in Nvidia or trade Nvidia, whatever, just so you know that volatility is really huge. Okay, and most of the people follow me probably sell option Nvidia, just to understand that no matter where you sell it, there could be a big drop. But if you want to sell options on Nvidia, you really have to have true conviction for the next 5 to 10 years, right? If you pull back next, all time Nvidia looks like this, but then if you zoom in, there's some scary drops too. So, these drops are meant to shake off, a lot of investors that don't have the stomach because it's against human nature. Okay, so that is Nvidia. Is there any question about Nvidia? I just want to pause for 30 seconds before I move into SPX, because SPX is more widely followed. Right now, everyone's like, more volatile like this. But if anyone has any question about Nvidia, want to throw in the chat, I can also see it. So let's get right into the SPX Index Forecast. And then next couple months, okay, we take this very seriously because amount our groups, I think we have multiple 8 figures for sure on the line, or maybe 9 figure. I personally contribute multiple 7 figures. So we take this very seriously, but at the same time, because our margin of error can be so big, right? You guys seen it. Nvidia dropped 70%, 40%, 20%. SPX dropped 10%. The sky's already falling. So for our set and done strategy, it can drop 10, 20%. As long as it's not a sharp drop, you can drop in a month, 5, 10%, we're intact. Right? That's the beauty of our strategy, right? We don't have to sweat a lot overnight looking at all these news. It's the best basket. Well, I wouldn't say the best basket. There's a lot of dogs in the S&P 500, but generally it's been the best 500 companies in the United States. So, and Warren Buffett is investing in S&P, for the longest time is averaging 8 to 10%. Our target is 15 to 20%. We've been hitting it over the years. So what is our prediction? How does this affect you? A lot of the stocks you guys trade out when investing are more likely are in S&P 500. That's why this is very important, especially if you guys have FANG Group and Max 7, right? 35% of the S&P 500 is controlled by Max 7 right now. Okay, so that's why you should really listen to this. SPX or S&P 500, whatever, SPY, ES, it's all the same thing. Okay, all S&P 500 has been dropping for 5 straight days. Has been dropping for 5 straight days from all-time high. On Wednesday, it briefly went over 6,000 points right here. You guys can probably see the small screenshot, and drop back down due to Trump imposing and signing all the EU tariff, right? Which erased all gains for spawn tariff on Canada and Mexico, right? So again, I don't want to mention about the whole drama or the gun show that's going on, right? Per spawn, now we're April 2nd, we're doing again per spawn, and more likely, like I said on the last Facebook Live, if you guys want to check that out, right? If even if the tariff goes in, Canada and Mexico always find ways to get exemption because it's hurting both countries, right? And historically, they've always been getting exemption. So, tariff is just a headline creating a lot of fear, but humans are smart enough; they will adapt. And politics, I hope on the Canada side is strong enough. Okay. Also, what we have seen, okay, in case you guys don't know what dart pool is, this is a bit too technical, but basically dart pool are the money that don't want to be seen in this market. The dart pool is basically a lot of rich people or a lot of high net worth, a lot of institutional. They try to hide their trades in dart pool because they cannot track it, right? Even when we track institution, if you're trading dart pool, it's hard to track it. Now, thanks to a lot of our analysis that we pay for, we can see that the institutional are actually selling overall in all these levels. But then we see that on the SPY, which is around 596, so equivalent to here ES about 5960, we are seeing they start buying. Okay, what does that mean? So they've been selling. Oh, we start seeing dart pool, which is the money that are hiding. So last week I shared about it, right? Last week you start seeing retail investor kept buying, but then the institutional investor kept selling for the last week. But now institutional investors start buying. But then what's funny? The retail investors are scared right now. But then who has more money? Institutional or retail? Who? Who has 1 billion right now? I don't. I don't have 1 billion. Institution has way bigger money. So we just like the little fish want to follow the trend. Unfortunately, we are. They can play around with us. Now we're seeing the big money are showing their head, popping up again. We're creating some fears. But they're like, okay, everything's actually okay. Terror is not as scary. So we start seeing that they're buying again. Again, we don't know if they're smart or dumb. We're just saying institutional money in general. Okay, AJ, now we go into your topic, right? You asked about Warren Buffett. I read your mind. Berkshire Hathaway is holding on a lot of cash or cash equivalent. All-time high, right? AJ, 334 billion, which represent more than 25% of total asset. That means if you have 1 million, you have 25% of cash sitting on the sideline. Just to give you guys into a perspective, most ETF you guys investing are 99.9% subscribed. That means that every time you invest in it, they have to invest it. So they have less than 0.1% cash, unless they're paying dividend, whatever. Okay, but right now, Warren Buffett having 25% total asset in cash. Right? Some people is like, Cody, if Warren Buffett is holding less stocks, does it mean he's selling? He's seeing a crash. Is he seeing it? Right? This is over the years, right, of Berkshire Hathaway's cash as percentage of asset. Right? 2000, right before 2000, well, you will see that Warren Buffett got burned too, right? 2000, boom. Right? He was 3%, cash only. Right? But then after that, he started getting a lot of cash, right? Going to 2008, and he started deploying it, right? And then coming up to COVID, almost COVID, right? Almost, about 17% after COVID, start deploying it. But this is the most controversial side. He deployed in airlines and all that, right? So, it dropped to about 10%, but now it's at a historical high level. So what's he seeing that we're not seeing, right? Last time was at this high was about 2006. The drop was 2007, 2008. Right, 2000, he was pretty much deployed, right, about 12% go into it. So every time the cash is really high, it seems that something happened. What can we track about the rich institution that they cannot lie about is where their money is going. If they really put it in cash, means either they cannot find a good investment, or maybe they think there's a crash, or just false alarm. All right, maybe just false alarm. What we think from our research is that he is actually not panicking. He's not panicking. The reason why he holds a lot of cash, okay, is actually because he's rotating into more defensive stocks, like consumer staples. He's Coca-Cola and all that. Warren Buffett doesn't have a track record for investing in tech companies, right? Snowflake, it flake. Charlie Munger and Baba, bye-bye, right? It kind of bye-bye. I have some Baba too, in a small amount, but yeah, it was pretty much under the water, right? So they don't have a track record for tech, and now most money are in tech. And he see everything's kind of overvalued. So he's just like, well, maybe I'll put more into consumer staples. Okay, put more into consumer staples. I'm gonna go, go greedy when others are fearful, be fearful as others are greedy. Right. So that's why he is going more into that. And also, he might be putting more safe investment like treasuries, 3 to 4%. I know US want to drop rate, but now inflation is coming back, right? So the bond rate might not drop that fast. You can still get 4%. Not bad, not too impressive. Barely beat inflation, right? That is where we think Warren Buffett actually putting his money. Okay. Is there any question about Warren Buffett and why Berkshire Hathaway sold a lot of S&P or a whole lot of cash, right? Like, just to put that into perspective for you guys. There's always fearful sentiment in the market. For our said and done strategy, we always look at our analysis and we make our prediction on the market and we make the best decision from what we have seen. What does that mean? That means when we at an all-time high, we almost all in cash. When it dropped to here, we have 25% in cash. If it dropped more, we'll be more in cash. But we never put ourselves in a position where we're using leverage or we're using the money we don't have. Again, I'm wing at somebody in here. Okay, I'm trying to send a message, or multiple people, not just one person. If you are beating the market or barely beating the market using leverage or the money you don't have, margin, you are not a good investor or trader. A good trader or investor, just like Warren Buffett, he has 25% in cash, but he's still beating the market. Like us, we only use 25% of our capital, maybe maximum 50%, but we are beating the market. That's when you know you're doing the right things. Okay, so if you guys want to learn about that, you guys know where to find me. Let's move on. What's the leading catalyst for the stock market to sell off? This is what we look at, right? We always look for, we read these BlackRock's report and really say, okay, based on the likelihood of something can happen and the impact of something can happen on the vertical axis, what is up there? Most impact and most likely to happen. We track those. And this is what we see, right? Tariffs imposed to EU mainly for automobile, but Trump seemed to likely postpone tariffs to Canada and Mexico as they are more essential trades with close ties as negotiation tactics from Trump. Just so you guys know, a lot of you guys know I used to work for Honda, Honda Canada. We make Honda Civic and CRV. Very great cars, even though now I don't drive them anymore. Now I have two Porsche, but I still think Honda is the bang for your buck. I love the Honda. But I love cars, so I have a little bit of money now, so I just come on, let me live life a little bit, right? But what I would try to bring up is back then, 80% of the Honda that was made is actually shipping into the US. Let me repeat, 80% of the Honda made in Canada is shipping into US. So if they put tariff on Canada, I might kill Honda. Right? Back in the days in 2012, when the Canadian dollar was higher than US, every car we sell into US, they're losing money. At that time, I still remember, I started working at Honda in 2013. They were like, Cody, upper management was like, Cody, if we at this hold on for another year, we'll have to close the factory because we're losing millions and millions, hundreds of millions every year, right? Thankfully, that came down, right? So just saying, when US put tariff on Canada, US is hurting as much, if not more than Canada. Canada is supplying the most aluminum, most steel, most lumber, cars, and all that stuff. So it's actually quite equal, right? Okay, that's the first fear, tariff. Second, slowdown of economy. A weaker economy can bring down the profitability. Okay, we are seeing way too much things, but we are seeing the consumer spending are weakening. Home building, which is a leading indicator, are weakening. There's different factors on it, but that could be a sign of the economy is not doing well. Okay, inflation rate and inflation rate cuts. Right now, Canada and U.S. are going to be going kind of part ways on this. Traditionally, U.S. drop, Canadian drop, U.S. go up, Canadian go up. But for the last few years, or the last 8 years, they started doing different things. Why? Because U.S. is doing a lot better than Canada, unfortunately. Right? In terms of GDP, in terms of job, in terms of salary growth, Canada just hired a lot of government workers. Right? If there's any government workers, I'm not saying it's you, but generally the government were just not very efficient, right? And they don't know where to spend their money, right? So Canada's not doing as well. So they're trying to cut the rates and stimulate the economy. Whereas US, they're doing a lot better, right? That's where most of my money is in. They're doing a lot better. So they don't need to cut rate. They need to control that inflation. Whereas Canada is at we're going to deflation. The inflation is not there, so they drop rate. So for the first time, this kind of diverging now. Okay. So if you're from Canada, if you invest in Canada, it's very different than US, but most of my stocks are in US. Okay, so take it with a grain of salt for anyone who's listening to this. Also, stagnating AI development, the DeepSeek threat of how others can imitate and reproduce at greater efficiency and cost, right? So they're afraid that AI might stagnate because of hardware limitation, software limitation, and all that. But here's my take on it. If someone has a really good AI, like if DeepSeek is really that good, they will not come up to the surface and claim they're that good because they will hide that service and they will go and do their thing on it. The reason why DeepSeek come out and show is because they they would try to stir the pot, create some threat, and maybe it was always in the news, but all of a sudden it come out of the news. Right? DeepSeek is nowhere near where all these open AI and all that, just nowhere near. Right? They can do basic stuff, language translation, all that, but if they really have something really good, they wouldn't show it. Okay, they wouldn't show it. Fear and greed index, right? Right now, 100, totally agree, 0, totally fear. The market is in a state of fear due to the main reason Trump imposing tariff, right? So right now, right, when the fear is here 22%, right, with our sudden debt strategy, we're selling options on S&P with little deployment of 25%, we're making a lot of money. We're hitting our 1 to 2%, 3%, right? It's not about using more money. It's about when to go in, when to get out, when to get more aggressive, and all this combined, we can make much better decision, and that's how we beat the market. Okay, it's not about using more money, right? More money doesn't mean solving more problems. You actually create more problems. Okay, if you don't know what you're doing. Okay, so quick takeaway before I go into how to enter position. Quick takeaway is that current view of an S&P 500 has not changed. It has hit the all-time highs in the short terms, pulling back for consolidation. If it dips below 5,800, right now we're at 5,972, right? This is the future, so the market is still moving. Right? It could be a good opportunity to buy on the dip, but right now we're still in that range. It's kind of like, hey, we pull back a little bit. We have support at 5,800, but it's kind of been going like this. Are we going to really turn around, or we're just consolidating to go back up again? Okay. Market is finding negative news to push down the market, right? To push down the market. There's a lot of cash on the sideline, a lot of available credit to invest on the sideline. So there will be fluctuation in the short term, but then, just so you guys know, the whole 2025 will be interesting year. It will be up and down, up and down. And last year, S&P has been doing pretty well. It's been falling the last 5 years, right? Or 1 year, right? S&P has been doing really well, right? So, really doing 2 years really well in a row, right? That just means that this year is less likely to do well. Okay, and also because of the wild card of Donald Trump, so more likely to be flat. So typically, last year my buy and hold portfolio was up 50%, but this year I have a lot of people come to me and say, Cody, why don't I just leave it at S&P 500? Last year was 25%. My QQQ was 40%. You only make 50. Why you put more work into it? Well, we don't put that much work. We put 30 minutes per week, right? But this year will be the year, that we can beat S&P really well. Why? Because when the market is going flat, or when the market is going down slightly, or go up slightly, we can beat them easily. Because why? Because of volatility, more premium selling option, right? So if you're someone who's buy and hold this year, just be prepared that your performance is not going to be as good as last year. Okay, and selling option is really the way to go, in my opinion. My humble opinion. I have both sides. I have 33% and selling options, 33% in my set and done, 33% my buy and hold. So I have all three. I don't really care. But just knowing that behind the scene, I talk about other hedge fund managers. This year, our set and done strategy will be beating the buy and hold by a good chunk amount. Okay. We love this kind of year. In 2022, when it's flat, I was looking at this 2022, right? During this flat year, like this 2022 January to here, my return was 36%. Went from here, dropped to here, right? 2022, when it was dropping or it was going flat, mine was 36%. Meanwhile, everyone was like crying here, right? So if this year has the same volatility, I don't have to say too much. Okay, coming back to this, be prepared for changes in the market because it's no longer like 2024. We need to adapt to fluctuation. So if you guys are putting on stop loss, stop profits, just knowing that will get hit very likely. So maybe make it wider. We have the bigger stomach. Or learn about our set and done strategy. It's up to you, right? Because there's going to be there's no clear direction. So you guys going to be hearing at me every 2 weeks is like, not much clear direction, not much clear direction. But every time I drop, volatility spike, we take advantage of it. Every time I go up again, we're less aggressive, right? We are totally happy, but just knowing that there's going to be more fluctuation. Okay, we should be more conservative and be patient. Now's not the time to say, when it goes up, buy. Like you buy right at a higher drop. Oh my God, sell. right? And then go back up again. Okay, it's good again. Bye. And then come back down. Oh my God, I'm lost again, right? So we have to think more of a contrarians, more range bound this year. Okay, just keep those in mind. Okay, whatever you're doing. Many people are now expecting economy to worsen. Feds have more confluence to cut interest rate. This one we'll see about this, right? But yeah, this concern has always been there. There's always concern and all that. Okay, now we're gonna get into the last part. How do you enter position and do risk management? Okay, if you guys stay until this side of this part of the video, give me a yeah and tell me if this is the best Facebook life yet. Is this the best Facebook life yet? Right? I know a lot of you guys have been following me for a while, right? Some of you guys have been on Facebook side of things, watching recording. If this is the best one yet, give me a thumbs up, give me a like, and drop a comment so we keep doing this. Last part, we're going to go right into it. How to enter position and do risk management. Leave good buffer in your trades. If you guys are someone who's afraid of the market movement, you're in Nvidia and all that, just knowing it's going to be very volatile. Very volatile. Okay. So don't get shake out. Okay. Don't over panic. All that. Okay. Widen your buffer. Right. Widen your buffer. For example, if you're going to go in now, your stop loss at 114, maybe widen to like 110, widen to like 103, things like that. Also, another secret weapon we use are said and done. Also, you guys can use it in whatever strategy you're using. But if you're doing trading or whatever, you're buying things, you can actually keep the position size smaller and enter trades stacking your trade, right? If you're going to put on a trade, when it drop, put on one this week, next week close it. When it drop again, put on one this week. So this is the year where there'll be a lot of opportunity. But you got to be more flexible. Don't say, Cody, I have $100,000. I'm so excited. I learned about your set and done strategy. Let's go. Everything 100K first week. And then the market drop. You're like, Cody, is it working? Is it not working? No, like we stack our trades, right? So we always have trades going on. We always have theta paying our premium. So you should do the same if you're swing trading and all that stuff. Okay. And also, enter position gradually while the market is dropping, not opening lots of position at once, right? It's a lot easier to enter trades when the market are dropping, right? Than entering the trade and try to chase it when it goes up because you're buying overvalued stuff, right? Just in general, right? If you're long-term 10 years, who cares? Put the money in there, forget about it. But if you're doing trading, you guys will know what I'm talking about. It's actually easier to enter. When everyone's selling, you're buying, a lot easier to enter, best price and all that. But when everyone's buying, you try to buy, you're fighting with everyone. You get the worst price, right? So think contrarian. Think about this year. The takeaway is really if it's going to be more volatile. Okay, trade smaller, the smaller trades, stack your trades, and then don't get shake out, have more buffer, and then enter position gradually when the market is dropping. Because if the market dropped, let's say if market dropped, okay, just for example, ES drop from here to here, right? That's 200 points. You are 200 points downside buffer than here already. So this is much better point to enter than here. If it dropped more to here, now you have 400 points of buffer. Okay, that's much better point than here. If it dropped more buffer, right? Everyone have the bias of if the market drop more, they think the market will drop more, but it's actually contrarian. If the market drop, it's less likely to drop more. It's more likely to go back up. Every time it drops more, it's more likely to go back up. Okay? Every time it goes up, it's more likely to have a pullback. It needs to consolidate. But S&P, most of the time, it's all bullish or sideways. Okay? So don't try to short S&P. Okay? Definitely not the right thing to do. That's not what we do. We only buy put to hedge, but we don't never short S&P. We never look back on the long-term bullish. I don't go against the trend. Okay? You can make money that way, but that's not the right way to do things. Okay?